value that was presented yesterday. Good. Okay, good. So I'm ready to go, and I want to wish everyone a very good morning. So thank you very much to Simon for hosting the round the clock trader events, which of course we engage on, and then we can expand from and do further events such as this one, the live trading week in conjunction with London Investment Week. And we're also going to be exhibiting at the Round the Clock Trader Live, I believe, on the 6th of March, the 6th of May, I think it is, this year. Let's have a quick look at the calendar. Yes, it is, a couple of weekends away. So if you're going to be there, you can come visit our stand and say hello, meet us in person. Highly recommended attending that event. Superb event. Simon does a brilliant job putting all these traders together. So we're looking forward to that. Good. Very good morning to everyone. Just want to check two things. You can see the screen okay. You can hear me okay. Punch a Y into the chat box. Let me know that that's fine. Good to go. And I will be commencing my analysis this morning on the Euro US dollar. Once that's done, of course, Thierry will be commencing his analysis on the Pound US dollar. And as of yesterday, just in the same format, we will, of course, be looking to play some live opportunities. We'll go into the educational part of the session once live opportunities, if any, are running. And then, of course, we will have the opportunity to answer any questions just there. So just punch a Y into the chat box. Let me know you can see screen okay. You can hear me okay. As long as I know that that's all fine, I'm going to move through and get going. Okay, brilliant. It looks like everyone can see the screen okay, hear me okay as well, which is brilliant. That's a good start. I'm going to kick off this morning with the analysis on the Euro US dollar. I'm going to look at the Euro US dollar. There are a couple of possibilities this morning. Obviously, in line with the Morning Glory strategy, we have a signal to the upside, but we do also have a gap here as well, which you need to take into consideration. And that may very well want to fill into today. So there may be some opportunities short. So we'll analyze this. We'll have a look at that. We'll assess what we'd like to do from there, and then we can take things forward. I'm going to draw the price map out with you all again today, this morning, just as I did with you yesterday. And of course, then we will have the opportunity to gain an understanding of where this Euro US dollar could potentially move to into, of course, today. So good. Let's do that now. Are there any questions from yesterday before we kick off this morning's analysis? Okay, doesn't seem to be any questions. Absolutely fine. So what I'll do is we'll just move straight through. What I'd like to do very quickly before I kick off with the Euro-dollar analysis is just go ahead and show you the journal from the trade that we took yesterday on the pound dollar. I'm sure Thierry will analyze the pound dollar in more detail than I'm going to be. So he'll obviously go over the trade from yesterday as well. So obviously we took this trade on the 24th of April 2017. And we exited on the same day, obviously being an intraday trade. Those of you that were with us in the WhatsApp broadcast list, you will have seen the amendments come out to the trailing stop loss, and of course you'll have seen the trail stop in real time to be able to capture that 10 pip profit. So we actually had the target, the initial entry in at 127.97. Our stop was positioned. Let's have a quick look, verify the stop just there. So stop was actually positioned below the low just here. So 127.71 was where the stop was. and the target, of course, was 128.46. Okay, so we looked for 49 pips of upside. We trailed the stop there, and obviously you can see that the pound dollar did move to the downside into the rest of yesterday. And so this is the bar that we exited the trade on, this buyer bar just here. Then the pound obviously retraced. We didn't catch the reversal move, and that wasn't our plan anyway. We exited that particular trade, given statistical probability that that was not going to progress any higher, and so the stop was trailed pretty tight. 128.07 is where we got out of the trade, and of course you can see, if I just make that long on the journal, that that is now a 10 pip profit. So we'll go ahead and save the journal from yesterday. We'll close that out. And with all of these live trading weeks, one thing that we do here at Master the Markets very regularly is update everything on a transparent track record, and not only with the live trading weeks, but actually everything that we do in the trading space, especially in our live trading rooms that we do run. We'll look to manage and transparently log every single trade that we do take, and that's important because we want to gain an understanding of our actual performance in real markets. This isn't analysis. This isn't any kind of hindsight trading, like looking back on original charts and telling you where you should have got in or where you would have got in if you wanted to make 300 or 400 pips. I think that that's pretty irrelevant, and you can't learn in that environment. We're going to teach you here in live markets, real time, with real time trading. That's what we do here at Master the Markets. That's what we do best. No problems going live, because that's where the upside, that's where the money is. So let's go over to the euro US dollar this morning, 1 hour chart, and we'll do an analysis of the price map. I'm going to go ahead and draw it out with you all. As we did yesterday, price map is a very key part of our analysis for the morning. The reason for that is because it helps us to ascertain key levels that we look for breaks of as we move into the rest of the morning. So I'm going to start by looking at the euro US dollar, and I'm going to draw the previous day's high just at this price level just here, and this is 109.09, just there. 109.09 is where the previous day's high is, so let's go ahead and mark that on. And let's also look at now that the previous day's low. So obviously the previous day's low is this bar just here. This is a 3 a.m. Bar just here that's formed a previous day's low. There we go. Okay, so 108.88 just here. Let's just adjust this. There we go. Fantastic. Previous day's high. The previous day's low, 108.19, 108.20 in fact. That's the previous day's low. Okay, let's look at the range that's formed in between midnight and 8 a.m. now, and that's obviously a key range that we do look for as well each morning. I can't make my bars any bigger. MetaTrader 4 is looking to compensate for this price action here as well. So let's go ahead and draw in the range. The range is going to be on the high here, 108.70. And we're looking at a maximum range here, low formed at 108.50. 108.50. So this is the range so far that's formed for the morning. Let's go ahead and mark that in. And we've got range here as well. Great. Okay, good. Let's now look, take a step back, let's look at the daily chart, and let's have an understanding of what's happened into yesterday by way of daily. So you can see over the weekend, we did have a gap higher, and that's a gap of almost 200 pips that's actually formed on the euro US dollar. Now, generally speaking, gaps in foreign exchange do like to close. I normally like to talk in terms of, always talk in terms of statistics and probabilities, but for the gaps, I haven't done a study on that as of yet, so I'm not sure on the statistics and probabilities, but from a visual observation, gaps in foreign exchange do like to close. Is there anyone here that's done a gap study at all that knows the statistics or probabilities around gaps and how often they close in the foreign exchange space? I can't see any answers coming through there, so I imagine that that's a no. And I didn't really expect anyone to have done that level of research. It's very rare to see that happening actually in any of the retail space. Actually, to be honest, we're the only people that I've come across that actually do studies to the level of quantification and analysis that we do to gain our probabilities, and that's how we know where to get out and when to hold. Someone's put into the chat box, always like to close normally. Yes, but normally, unfortunately, is not a quantified number, and always is suggesting 100%, which isn't necessarily true. I've seen gaps that haven't closed. There's one on the pound dollar that's formed several months ago that hasn't closed yet. So it's definitely not always. We need to understand it from a mathematical perspective, because if we don't, then we're just shooting in the dark. And that's what most people do, to be honest. But that's not us over here. So you'll gain exact quantification and probabilities from this end. Okay, I'm just looking at the ATR 10 from yesterday. We're looking at it and seeing 74 pips. So let's go ahead and key that into our journal. So 74 pips gives us a 0.2 ATR of 15 pips. It gives us 0.7 ATR of 52 pips and a 0.8 ATR of 59 pips. So let's go ahead and draw in now on the 1 hour chart. Let's go ahead and draw in exactly where these opportunities should be by way of ATR, exactly where we expect the price to go to, travel to today, when we'll know when it's formed. Its range is going to be denoted by these levels. So 108.70 is where the high is of this bar. If I take away from that the 0.7 and the 0.8 ATR to give me an understanding of this range, then you're going to see 52 pips and 59 pips. So if we look then and we do a little subtraction, 108.70 minus 52, you'll get to 108.18, just here. And so that's just below the previous day's low. It's interesting to note that. High is 108.70. Take away this time 59 for the 0.8 ATR, 108.11. Let's go ahead and key that in just here. So that's the ATR 0.7 and 0.8 to the downside. Now we're going to do the same thing for the ATR to the upside as well. Let's just go ahead, key all of this in. So 0.7s and 0.8s. There we go. Then we need to key in the stretch values as well, and then we'll be done for our basic level price map. I'll put in the midpoint as well. So the low here, 108.50 plus the 52 pips for the 0.7 ATR, 109.02. This is going to help us with target setting and gaining a stronger understanding of where these ranges will form to for the day, depending on the direction we choose to take the trade. Let's delete this out, we don't need that. And the 0.8 is going to be 108.50 plus 59 pips. Just 109.09, just there. Let's go ahead and make that nice and accurate, 109.09. And that, of course, is the 0.8 ATR. Okay, let's go ahead and key in the stretch. Does everyone remember what the stretch is from yesterday? Punch something into the chat box. Let me know that that's okay. Okay, so lots of people don't know what the stretch is. The stretch is a concept that is actually formulated by another hedge fund trader, multi-billion-dollar hedge fund trader, going by the name of Toby Crable, done a lot of research on this methodology, the stretch, and all it basically is an average extreme to the open of 10 days. So you're taking 10 days worth of data from average extreme, closest extreme to the open, taking an average of 10 days, formulating then the stretch. Was given us that figure. And today, the stretch on the euro US dollar, and this of course helps us to understand bar formations. If we understand how the bar is going to form, then we have a very strong probability of catching the range. And that's the whole objective of this Morning Glory preference strategy that we're trading here with you. So the stretch for the day is 108.66, take away 108.78. That's 12 pips. I'm going to use 24. There's 2 times stretch, so we're going to go from the open just here, 108.66, 108.90. 108.90 is where the stretch, the upside is, and we'll look at the stretch to the downside as well. 108.66, take away 24 is going to be 108.42. Let's go ahead and key that level in as well. 108.42. Brilliant. Okay. Those are the stretch values. There's key levels that I'm looking for into this morning as well. And then that's pretty much it. The only other thing that I can really look for is the midpoint, and that's the distance from high to low, divide by 2, add to low. So you can see here the range of yesterday was 69 pips. If I divide that by 2, and then I add that onto the low of yesterday, 108.19. 108.53 is where the midpoint is. So let's go ahead and key that in. And that's the midpoint of yesterday. So currently we're just above the midpoint of yesterday, 108.53. Fantastic. I'm just going to mark that into a different color. I'm going to pass over to Tiro as well, who will run a price map on the pound dollar as well with you, show you any potential trading opportunities setting up for this morning. Let me just go ahead and key the midpoint into a different color here, which will be purple. And then obviously I'll just label it as well. MP, to make it nice and clear that that is indeed it. I strongly recommend a price map of some sort. You don't have to use the exact figures that we are just here, but I've always found, and Tiro's formulated this and created this, I've always found that it's very useful to quickly, at a glance, see exactly where the price is in relation to key levels. So that's the price map this morning for the euro US dollar. I'm going to pass over to Tiro, who's going to walk you through the pound dollar, and then we'll go ahead and just before 8, obviously, once again, place trading opportunities, if any, on these currencies just here.
Okay, hello, and a very awesome morning to everyone here. It's Theo Nagapan here from the Master of the Markets Elite Traders Conference and the Traders Open Day. So, we had a trade yesterday, which I explained on why we took it and everything. And we made a very small profit of 10 pips. But of course, it's all about, minimizing your losses, locking in your profits, and waiting for the big runs, okay? And it's all about stacking your probabilities onto your side. We did talk about the price map yesterday. Rishi has gone through that with you today as well. You don't need to necessarily follow the exact price map that we have, because you can use it according and tailor it according to your strategy that you have, okay? The reason why we use this price map because statistical validation behind every single price point over here, and that's what we are looking to do. Now, in terms of today, what do we actually have? We have a bias from yesterday. Do remember that yesterday I did talk about this and I showed you some stats which I said took us quite several years even to find out, and that is also because we hung around the right people, the institutional quants, and that's how we got to know that, and that's what we're sharing with you right now. Now, in terms of the bias, as you can see, we always look at the previous day, which is yesterday, the Monday bar, and if it closes 50%, less than 50% of its mid-range, which is done yesterday, then there's a 71% chance, 71% chance that it will take out the low today of this bar, okay? So that's what we are saying, right? Okay, so that's what we do have, but I'm very aware, but do not be fooled, because you see, this bar here, right, as you can see, according to this broker, it closes at 10 p.m. okay, but we usually look at midnight closes. So according to my 1 hour here, I have designed it as such that the separators will close at midnight. So I'm only analyzing from midnight to midnight, between one blue to the other blue. Now, in terms of that, actually, if you actually observe, relation of yesterday's bar to the previous day's bar, this yesterday is actually a insider bar, okay? We usually do not trade insider bars because we do not have the stats behind it, but I'll do see if we do get a very strong viable opportunity today, and I'll see if we do we'll consider taking that. Now, in terms of, I'm just going to do a very quick check. I've got my ranges, I've got my 50% midpoint from yesterday, I've got my stretch points, which Rishi talked about as well. Then I got my 0.7 and 0.8. My 4 hour and 1 hour is pretty much the same, and I get those quantified consistent swing levels from my smart money indicator, where we got all the levels quantified, no redraws on this whatsoever. Do remember that the smart money indicator is not something that we designed. It's a leveraged off institutional quants which have spent millions of dollars on this research, okay? Whatever it is, I mean, even if you don't want to use this indicator which is quantified, it's totally fine, but have some kind of quantification level for your swing high, swing lows. The sad thing is 98% of the 10,000 traders, 20,000 traders that we have met and trained and spoken to all over the world in seminars, conferences, and coachings, sadly enough, most people do not know, 99% of traders do not know how to quantify the swing high and swing low levels, let alone they know even what they mean even. Right, now, based on this, at the moment, so I've got my 0.8, 0.7. Do remember that what we're really looking to do here is that we're doing bar by bar, right? Remember I told you that yesterday, because this is intraday trading, only the last bar yesterday is important to us in the daily time frame, and then we are bringing down that knowledge to the intraday time frames and making them correlate. Now, in terms of that, what we are really looking for today is a bar which makes at least 0.7, right? So remember that this, let's say this is previous day bar. I want today's bar to make at least 0.7 ATR of this range of the last 10 days at least, okay? That's what we are looking for, right? Okay, great. I'm just going to take a look at something here. Mm-hmm. We're saying good. Okay, so let me just see. Just going to do a tiny calculation here. Do you have any questions from yesterday? Actually, I'll take the questions after we take a short break after this, but I'm just going to tell you what to do now. Right. Mm-hmm. Cool. Okay, so what we are going to be looking at the moment, let me see this. Okay, great. There is a certain level over here that I'll be looking at before I will negate my short side over here. But as of now, as of the 7 a.m. bar, we can still take a short based on this. Okay, we can still take a short. I will put my entry order for here for now, and we'll see how that carries on to be. But if this bar continues to go on forward to a certain level, then we'll cancel this short order. Okay, I'll tell you all that in a bit. But for now, today the bias is a down. I'm not going to take a long for today, unless and so forth the trade does certain price points on the chart that then I will look at again. Okay, right. I guess that's that. In terms of levels, what are we looking at? We're looking at the low 12789. 12789 is what we are looking at. Next, it will be for the high of this bar in terms of stop loss 12814, 12814, and our target. Just going to put it for pointing at the moment 12718. Okay, great. So I'm going to keep it at that. I want you guys to look into this and understand what we have done and draw the price map onto yours as well. At least do the 0.7 and 0.8. ATR 10 is what we are looking at. Okay, I want you all to get into that habit. Okay, good. So in terms of GBP USD, looking at short bias, and entry is 1.2789. Stop loss is 1.2814. Target is 1.2718 is what we are looking at, okay, in terms of this. Okay, great. So that's what we do have at the moment. Okay, so I will pause myself at the moment. If you all have any questions at all, just post them in and we will answer them. I'm going to take a very quick 10-minute coffee break for you all as well. Take a 10-minute coffee break and also work on this as well. We'll resume at actually 10:15, I think. No, sorry, 8:15 we'll resume. Short coffee break. Short coffee break.
Okay, welcome back here this morning on the live trading week, 25th of April 2017. Time is 8:16 a.m. And just looking again at the Euro US dollar, for those of you just joining us, we are looking at potential opportunities short on the pound against US dollar. Theory has already published a set of levels. I'm also looking for potential opportunity short on the Euro US dollar as well. According to the probabilities by way of break of the high and the low, you can see actually the euro dollar has closed above its midpoint yesterday. The close above the midpoint was actually this bar just here. It was just marginal. First of all, you can see that actually it's only closed above its midpoint by 3 pips. However, given the daily chart and the analysis that we've done on that already, you can see obviously there is a large gap in between where we are now and this current price. Now, that does give us a heads up that perhaps that pair may look to close that gap. Obviously, it's all a question of timing, and we don't know specifically when. I'm just looking at the Forex Factory website at the moment as well. Let's just refresh that. It's coming up with different time zone to where I am. Let's just correct that here. So we could see that if I look at the calendar on the Forex Factory, there's not really a great deal of things happening today. So at 9:30 a.m. there is some news on the pound, but it's only medium impact, and some low impact announcements other than that. And then 3 p.m. obviously we've got the dollar consumer confidence. It doesn't basically give us much room by way of movement based on the fact that there isn't that much news about. You've also got plenty of news coming out tomorrow. That looks like it could be a lot more active and fluid. So anyway, in any case, we'll keep a lookout on this. Now, as a result of wanting to take this short by way of the bias, by way of the gap, one thing that I need to do here at this time is wait for a 3-bar reversal pattern. So here at Master Markets, we've constructed 8 different ways in which the price can give us a reversal pattern, and one waiting for one of those key 8 measures to set themselves up. That hasn't happened yet. So in a nutshell, if I were to draw it out, if I were to draw out, let's say 2 out of the multiple potential reversal patterns, in a nutshell, we're looking for something like this. One of the patterns could be the Master Markets V1 setup, which of course is the same setup that we use on the 80% RB, which in a nutshell is 2 buyer bars here, followed by a seller bar. Now the seller bar here on the V1 pattern is the highest high of minimum 2 bars, and the close is below 50%. So I'm looking for that on the hourly chart to potentially sell up for me. If that happens here at the end of this at 9 a.m. on this Euro US dollar, that will be a potential short signal. We can put in a trade to go short there. There are a couple of other factors we can take into consideration as well. In any case, that's one of the patterns. The other pattern that we could see forming here very easily is a reversal pattern that will look a little bit like this. So we'll have potentially 2 buyer bars, following an inside bar that I don't think is possible anymore because it looks like it's marginally broken, but an insider bar again that's closing below 50%, in which case we will take a trade on the break of that inside bar. So that's potential possibilities for what could easily happen into this morning. Let's just be patient with this. It's created a higher high at this time. 108.86 is the previous high, and then 108.87 is the current high. What I'm really looking for at this time is really, as I say, one of those reversal patterns. So at this time, it's more than likely it's got to be the V1 reversal that I already showed you, which is this one here. And then we can assess if we really want to take that opportunity short based on the other statistics and probabilities that we've compiled. I'll go over that all with you very shortly. So this is basically what we're looking for now to happen. I want this bar to finish as a seller bar and close below 50% of its range. That will give me a nice little reversal signal. We can place a short trade. Certainly to go lower up to the zero point 0.8 ATR as our initial target, just there. So yeah, let's see. Let's just be patient. Let's keep a lookout for that. Some of the time, obviously, as you know, it's just about being patient, especially with foreign exchange pattern setups. It's about following your plan and staying disciplined. And we always sign off all of our webinars by saying just that: stay disciplined, follow your plan, and trade like a master. So we'll be patient and we'll wait a little longer to see what this gives us. We'll continue our analysis on it as well, and we'll resume shortly. Today I'm going to be covering from an end of day strategy perspective. I'm going to be covering the 80% RB, which is one of our flagship strategies here in the live trading room. End of day, it's one of the patterns that we use. Again, here we use this V1 pattern in that potential setup, and I'm going to be showing you the statistics and the research that's been done around that and how we've compiled that all. So it's a pretty interesting presentation coming up. It's going to be pretty detailed, so you can see I'm going to show you the concepts, the objectives. We're going to start from the base level. We're going to work down. We're going to show you exactly how we put this all together by way of the types of questions that we asked to gain answers for our programmer, to gain a indicator that would give us options, to give us ways in which we can assess the price and the price action of turning points in the market. So I'll be going over all of this very shortly, so bear with me and we'll kick off very shortly. Let's just keep a lookout on this Euro US dollar. Let's keep a lookout on the pound dollar as well, on which there's already a resting order. We'll do both and we'll resume shortly.
Okay, traders, right. Now we are back on the screens again. If you can hear me okay and see my screen, just type in yes. Okay, great. So I can see that you all can hear me all right. Okay, good. So now, based on the, I've got some questions over here. Okay, I think I've got some questions. I'm just going to, before I answer the questions, I'm just going to look at the chart with you right now so that you all can understand what's happening as well. Right, so I've got this red line over here. Now, it has crossed this red line. Now, this is basically, it's not one of your typical resistance or horizontal resistance line. It's basically a calculated line based on mathematical formulas, which when it goes past it or goes below it, we will change our bias accordingly. Okay, we'll change our bias accordingly. As of right now, remember that from our higher time frame, right? From a higher time frame, remember that this is a 1 hour time frame. Yeah, this is a 1 hour time frame I'm looking at. Now, if I switch the time frame and go on to the daily, now you can see from the daily, from yesterday, I told you all that the bias was down. Told you all that the bias was down, right? Bias was down. Now, however, that doesn't mean we stick just to that bias throughout the day. We must also see, this is important here, we must also see if the lower time frame correlates to that higher time frame bias with time. You see, let me give you an example, right? So if, let's say from yesterday, the bias is down, and then today, now price just shoots up another 100 pips on the top, of course, you're still not going to be stubborn and take a short, are you? Market is telling you something otherwise. So likewise, we have these levels, this red line here especially that we have, to tell us when our bias will be negated from the higher time frame. Okay, and that's the point here. It's derived from mathematical formulas and calculations. Now, let me ask you all one question, right? Let me ask you all one question. Let's see if you know this. Now, if you know the answer to this, you're in a very strong position in intraday trading. Let's assess and see where you all are at. My question to all of you over here is that if you were to choose, one intraday trend indicator, if you were to choose one intraday trend indicator, what would that be? If you were to choose one intraday indicator that has got very high reliability, let me put that in as well, has got very high reliability, what would that be? Now let me send to all of you that question, and let's see if you all get that. Okay, so I'm getting a few answers. Let's see. Most of the answers I'm getting all are on indicators. MACD, RSI, DMI, Bollinger Band. I've got a very vague one over here. Reverse indicator, enough pips to cash on the way back. RSI, okay, volume. Now, traders, I think it's time. I mean, if you guys are really serious about this, it's time to find out the real points which will show you true high reliability of trend indication. Now, it all depends on how serious you are in going to take this game. If you're not going to be serious, it's going to be a hobby, then forget it. And in fact, we assess that when you come to Traders Basecamp anyway. And then if we see that you're taking it as a hobby, we will tell you outright, please don't spend even one single penny with us. Because we want serious people. Because you see, at the end, what's the point of even spending £1 with us if you're not even going to take it serious? It's just a waste of time and money. Or even £10,000. What's the point? Now, first of all, think about this logically, traders. Let's do some slow thinking over here, which gives you the high probability of success, which most people don't do, and they're busy running around. They don't do slow thinking at all. They do fast thinking. Let's do some slow thinking. Now, RSI, stochastic, MACD were all the answers I was getting. Now, one thing which is a bit different, I'm getting another one here called a stretch moving range, which I don't really know what it means actually. I know what a stretch means, but I don't know what you do with the moving range. Maybe you basically mean of the moving average of the stretch. Now, think about all of this. The usual ones are all here. This is not that common, but you can bespoke it if you're saying what I'm saying. Now, exactly, I mean, some of you already mentioned it. All of this, you see, this is the beauty of slow thinking, because when you slow down yourself and you think about it, contemplate about it properly, you'll start to understand why this won't give you a high reliability. Because first of all, they're all what? Some of you already said are lagging. You see, think about it. Price is the fastest. You can't deny that. Anything derived from price, must be lagging. It's like anything in life, is it not? The first person to see the fire gets the information the fastest. Everybody else that he talks to on the phone after that is all getting delayed information. Likewise over here, and if it goes down through further sub layers, it's more delayed. For example, if that person then calls his first friend, and then the first friend will know it, but it's still delayed, then the friend then calls the other friend, more delay, and that friend then calls another friend, then delayed, right? So we can absolutely uniformly agree this is all lagging. Now, if it's all lagging, then what's going to happen to your entry? What is going to happen to your entry? Is it going to be late or is it going to be early? What is it, traders? Come on, type it in. Is it going to be early or is it going to be late if it's all lagging, all this? Exactly. And all of you are getting the same answers right now. Late. It's going to be late. Now, you do know what happens when it gets late, is it not? Because a late entry, first of all, reward to risk is skewed. You won't get a good reward to risk. Second thing is because of the late entry, your stop loss is so far away, and if they do not go in your favor and you keep on holding on to it, and that becomes a big loss. And the big loss is not what we want, because that eats up all your profits and your equity curve struggles to go to positive territory. So yet again, we all know logically, conceptually, that price wins in the end. But unfortunately, traders, there's almost none almost none information out there which is readily public, which talks totally on price, does it not? There's not any information at all on price level studies. I highly encourage you all to start looking into this. Now let me give that to you all as homework, if you all don't believe me. Now, the question was, if you were to choose one intraday trend indicator that has got very high reliability, what would that be? Now let me tell you something. That indicator is price. And what about that price must you look for? Is what I want you to do your homework on. Go on to the thousands of Forex forums out there. Go to the thousands of stock forums out there. I can tell you to 99.99% probability that you'll probably not find the answer. But I would like to challenge you all. Maybe you might find it. Maybe there's one forum that I did not find when I was in the search for this. I leave you all to that. Do that as homework. Find throughout all the books, all the contacts you have, call them everybody. Call even the hedge fund traders. Call them and ask. If you were to use, now this is the thing you got to ask them. If get the question very specific, then you'll be able to cut out the noise and the nonsense people are talking. If you were to use price, has an intraday trend indicator. As an intraday trend indicator, I'm not talking about pure price over here, right? How many pips is moving, that's all. If you were to use price, no such MACD, no such stochastic, no RSI, no stretch movement, nothing. Just price, just in terms of pips on how much is moving within that day. If you were to use that price as a pure intraday trend indicator to decide your trend up or down, how would you use it? What would you look for? And I want you all to go and think about it. Please don't make any educated guess at the moment. I give you all this as homework. I give you all this as homework. And tomorrow, if you really want to know the answer, ask me. I want to see whether you guys really want to know the answer or not, whether you're passionate, whether you're committed. Remember over here at Master the Markets, we always entertain people. We're always here to run 1,000 miles more when you show me that hunger, the passion, the commitment. But let it make it all congruent with your thoughts, words, and deeds. Just because you say you're passionate and committed, and then you turn up 2 hours late for a trader's base camp workshop or for a coaching appointment, that doesn't show me that you're really hungry, passionate, committed. Thoughts, words, and deeds are not in alignment. And that's what I want to see. Tomorrow, let's see how many of you find the answer to this. And the thing that we are really looking for over here, the question that we're looking for over here is basically, let me see. The question that we're asking for, I'll type it again. If you were to use price as an intraday trend indicator to help you decide on direction. If you were to use price as an intraday trend indicator to help you decide on direction, what would you look for? How would you use it, basically? How would you use it? That's your question. Okay, great. So now with that, I leave you all with that now. And I can tell you right now, you will see today, in terms of the price action today, the higher probability, remember the word, a higher probability for today, because we know how to read price. I'm not using any indicator. The only one I got here is ATR, right? That doesn't tell you like anything in terms of direction. I can tell you here from all the price analysis that we have done, just based on price alone, the high probability for today is on the upside from intraday price movement. From intraday price movement. It's not correlating to my daily bias, right? So you will see it today to high probability, but of course we can have anomalies. So look at the chart and let's see at the end of today what happens, and we will review it tomorrow as well. High probability, remember I said that there will always be outliers. But high probability, this will move to the upside with a bigger range to upside. Now towards the end of the day, we'll see that. Now I don't want any answer at the moment. Some of you are saying, you know, you use that indicator, that indicator, you look at close and all that. I want you all to do this as homework. Think about it properly. But I already gave you the clue. Price. And you don't need any order flow numbers. You don't need anything at all. Keep it simple. Just price alone. Just on the movement on this chart, if you know what to look for, you'll be able to know what the intraday high probability today is. Okay, right, great. Now let's move on. Let's move on. Okay, right. Now I will go through stops to cash today. That's one strategy that you all can look into. It's in fact very similar to what we were doing yesterday. So let's take a look at this. Let me just put this across. Okay, let me see. Okay, good. So I've got okay. I'm just going to go through this. Okay, let me just see. Great. Okay, good. So we'll go through stops to cash. At the moment, I just had one question coming in about the, let me just see, about the 2 bars, and yeah, remember that the stats that I gave you yesterday about closing above a certain range is only on the daily time frame. Okay, only on the daily time frame. Yeah, on a daily basis. You can apply the study onto the 1 hour, but we have not done that because it doesn't align to the objective what we want to reach for our strategy. If you want to do that, you can carry on. But all I can tell you with all the numerous studies that we have done is that whatever stats that you get a higher time frame, if you apply that to lower time frames, the stats and the probabilities drastically reduce. Okay, drastically reduce. All right. Okay, so that's to do with that. Now I'll move on to the presentation. I'll take on questions later on. Great. So today I'm going to teach you one strategy called stops to cash. It can be used on an intraday basis. This is the disclaimers over here. Do remember that everything that we're sharing with you right now is all purely educational. Okay, and it's all what we're doing so that you can learn. Okay, everything that you do is under your own personal own risk. That's just to put a picture to my face. Okay, so let me just put it in full view. All right, great. And some of you definitely have seen me definitely in person. We're going to be speaking live on the Round the Clock Trader live as well. So that's on the 6th of May. I'm sure Simon will be telling you more about that. My journey started as a PhD researcher. Then I went on to do this workshop, Make It Happen, where I got absolute clarity on what I wanted to do, and I got on to trading. And here we are, 10 years into it. Now, the unique thing about us, I think we've already mentioned to you before, transparent track records, research-backed systems. You've already seen how we're applying it in real time. I've not seen most people even do that. And also not only not do that, but according to price alone. Open door support, any questions that you want, you can always email us and we'll be more than happy to help. Don't want to delay you more about talking about us, because it's not about us, it's about giving you good, immense, high value in these 3 days. So if you want to find out more about us, masterthemarkets.net. The only thing I would say over there, masterthemarkets.net, one thing to definitely look at is our blog videos. We give high quality information over there because it's more time efficient for us to disseminate through mass media avenues. Okay, so blog videos, definitely go look at it. We'll talk a lot about price over there as well. Right, okay, so we'll have some interactive exercises. As you know, some of you already won it yesterday. The TE kit is what we have. You get, includes a free ticket to Traders Basecamp when you buy the TE ticket at a 50% discount. Okay, highly valuable workshop. Right, so this is what we're doing anyway. Live trading, real time, real cash, stops to cash, strategy review, Q&A. We'll be doing all in this presentation right now. Great, so let's move on. Now today we're going to be looking at this stops to cash strategy. Okay, stops to cash strategy. Now the stops to cash strategy, what we're looking for is basically a reversal contrarian move. A reversal contrarian move. Okay, but on trend with the higher time frame, driving stops out, exiting on higher time frame support and resistance, a model of small losses, and 40% reliability. The objective is to capture 80% of the intraday move. Capture 80% of the intraday move. Now let me summarize this concept for you. Okay, the main concept of the stops to cash is, I'll repeat myself again. Traders, listen to this very carefully, because this will save you many more years of just looking at the screen blankly and banging at the screen and getting really worried why you're not making money. The concept, a very strong concept for any intraday strategy, is to understand that every day, that instrument you are looking at, let it be pound dollar, let it be the Dow Jones, let it be any instrument, be gold, let it be oil, whatever it is, it moves a range. It moves a range. Because if price does not move at all, you will get a horizontal line throughout the chart. So price must move, and also because this is a business to the market makers, they will make it move. So you are having a range every day. This is a concept that will stand through time. Very important. Most traders won't even know how to develop a strong concept. There are 4 or 5 concepts that we use to develop our strategies. I'm telling you one for intraday, especially very important. Price moves a range every day. Not only moves a range every day, you can then go and quantify it to find out an X amount of range that it moves every day. It moves a certain amount of range every day. A certain amount of range every day. Okay? And you need to go and do your studies and your research on that particular instrument that you're trading on. If you find out on, let's say, the Dow Jones, every day it definitely moves 80% of the time, not 100%, of course you can't get 100%, 80% of the time, 80% of the time, it at least moves 50% of yesterday's range. Let's say you find that out. 80% of the time, you find out that that particular instrument, gold or oil or whatever it is, it moves 0.5 ATR, and the ATR can be 10, ATR 10 of the ATR 10 range. It moves 0.5 ATR 10 of the range every day. Once you know that number, it's very obvious that if it has done that range, by the time you look at it, then you do not trade it anymore, or your objective can be towards that particular point. And that's why our objective is capture 80% of that range of the intraday move, at least. Okay, that's what we are looking at over here. Okay, great. So that's what we do have. Now on the chart, what does it look like? Take a look. Let's take a look at yesterday's bar, right? If I were to do that on a practical basis, look at yesterday's bar, and if I look at yesterday's bar, and if I were to do the ATR 10, I place my cursor for the day before that, or on that bar itself, on yesterday's bar. Now look at the ATR 10 on the data window here, this number here, it would change, look, and it gives me 105. Gives me 105. So 105 is the ATR 10, right? Now, if through my research I have found that it moves an average 80% of the time, every single bar that you see on this chart moves at least 80% of the time, at least it moves 0.6 ATR, let's say, 0.6 ATR, then I know 0.6 times 105, how much is that? Go on and type into the chat box. How much is 0.6 times 105? How much is 0.6 times 105? There you go, right? 63, some of you are saying. Okay, good. Now, so if I know that is 63 pips, so today, when I'm looking at the intraday time frame, if I take it from the low that it has done until now to the high that it has done, if it's done already 63 pips, why am I taking that trade anymore? You see, from the long side, it's already done 42. That means I've got 20 more pips before I get out. Now, however, on the short side, you can still, there's a lot of movement still, isn't it, that you can go to, right? Yeah? So it's only moved like 22 pips now from the short side. If from the high to the low, it's got to do. Yeah? So that will tell you a lot. Now, that is very, very important. Remember, again, what did I do for you all? I've analyzed everything using price, right? Using price. Very, very rarely would you see anyone ever doing this. But start to understand, because you know what, traders? I haven't seen anyone do this amount of level of price level quantification studies like us. I'm not just telling this just to put ourselves above the rest, but that is the truth. Truth is truth, fact is fact. But in US and institutional quants, yes, they do this a lot of times, but unfortunately, general public don't get much access to this. Right, now let's move on. Okay, great. Now, so you all got that. This is a very important concept, because on this, you can also do much longer term strategies as well. Okay, very, very important. I'll let you all think on that. You can do end of day strategies as well based on just this concept alone. Okay. Objective, I've told you already, you can be 80%, what we have written here, or it can be 70% as well. Now, I'm going to talk about entries. Now we're going to talk about parameters now, okay? We're going to talk about parameters, right? Now, before I talk about parameters, I just quickly want to ask you all one thing. Okay, now, before we design any strategy, or you want to follow any strategy at all, right? Before you follow any strategy at all of us know that any strategy that we trade must have an edge. Must have an edge. Now, let me ask you all over here, right? Let me ask you over here. What do you all understand by this thing called edge? By this called thing edge. But I will give you a clue. There are three categories. There are three categories to subdivide an edge into. But before you go into the three categories, I want you all to type in for me on what do you all think what you think is the definition of an edge. What do you all understand by this? If you all don't understand this, you're really way behind the curve. And I tell you something, 99% of even intermediate traders who've been trading for 7-8 years don't even get this right. Because firstly, they don't know the definition. Second, they don't even know this. Now type into the chat box on what you understand in your own meaning, in your own words. What's the definition of an edge? Remember, the clarity and the detail that you give in your answers reflects the clarity and the seriousness in your mind on how you take trading. Because anything that is in the mind is what comes out. Right. Now, most of you, when you typed in your answers in terms of higher probability advantage and all that, most people, what I found, when they define an edge, they only cover only one out of the three categories. One out of the three categories. Now, you see, I'm getting a few more answers, but it's all coming in different points of these three categories. Now, let me put it very simply for you all, right? An edge is one where you have a common occurrence that occurs in the market, and you're able to capitalize on it to put money into your pocket. Now let me send that to all of you. Right? An edge is one where you have a common occurrence that occurs in the market and you're able to capitalize it on to put money into your pocket. Now the last part is very important because you can have a common occurrence, you can have a higher probability strategy, but if you don't have the other two categories of an edge in play to formulate your strategy, it's not going to put money into your pocket, which most of you over here have experienced. Now, what are the three categories? So the first one is what we call the CO, the common occurrence. What happens most of the time recurringly in the market. So the concept helps you with that, which I already said, a certain range happens every single day, 80-90% of the time, common occurrence. Second thing, based on a common occurrence, you then need to develop your PP, your power parameters. Now the power parameters, very important traders, need to be statistically validated. You need to have your research in that, which is what I was showing you yesterday. If it closes above the mid-range, 71% chance taking out a high. Power parameters, based on the power parameters, got to be aligned to the common occurrence. Next, the final part, which sometimes is very difficult to form, and where most strategies will fail, which is what most of you would know as the reward to risk. We call it as the power rewards. But do remember, in the reward to risk, there's two parts: expected reward to risk and the actual reward to risk ratio. Actual is what puts money into your pocket. You can anyhow go and put expected reward to risk ratio 10-1. But how many of your trades are even going to make 1-1? So that, traders, the three categories of an edge, very important. First of all, people do not even know the definition what an edge is. And secondly, I can tell you for a fact, most or you would not ever have heard this about the 3 categories of an edge and broken down to this level. Not only I've told you a theory, but we also know how to formulate strategies based on these 3 categories. Now the 80% RB that we do is based on all of this. Is based on all of this. Okay, it's very, very important. If you want to take this seriously and change your life around, it's time to start thinking along these levels, along these points. Very critical, traders, because your life can change, and many changes when you see that money rolling into your account, when you have broken that time and money link, when money starts to serve you, it's a beauty. Right, let's now go on into the power parameters. So here's what we're talking about, the power parameters, building it on statistical validation towards the common occurrence. I'm giving you an example of stops to cash. We have of course modified it and made it into an elite strategy, which is now known as the morning glory. I'm giving you a very simple version over here, right? The first thing that you need to look at is your daily time frame. Look for a trend. Look for a trend on the daily time frame. Remember that intraday trading, we're only looking at bar by bar analysis. You don't need to look at cycles, no point, bar by bar analysis. Now in terms of the bar by bar analysis, you need to look at the trend. Now the market, in terms of the bars, I'll give you a clue, right? Now just by looking at bars, you can look at a trend just between 2 bars. Would you all know how to look at that? Type into the chat box, how would you look at a trend just between 2 bars? Type into the chat box if you know how to look at a trend between 2 bars, and be definitive about it. Don't give vague answers. Okay, good. So now there are, I'm getting a few here, up, down, outside, in and uptrend, high and lows, downtrend, low highs, right? But remember that the trend now is what we are talking about between 2 bars. Okay, I've got one specific over here. Okay, I think in fact, for giving that answer, I think I'll give this person actually basically a T kit. Actually, well done, actually. Very good. Marvin O'Hill. I would like to give you the T kit for our team will contact you, okay? Our team will contact you. Okay, cool. Now let me just explain to you all exactly in real terms what we actually mean. Okay, so congratulations, Marvino, so you for winning that. Now, what Marvino has said right now is basically he said higher high and higher low for an up. This was the most specific one I saw. Everything else was, you all did say it, but you didn't say it to this level. But I will explain to you all what we all mean over here, right? Now, follow this very closely, because based on this, you can formulate so many strategies just on price. Just on price. First thing first, right? You all know what an OHLC bar is. You got to open, you got to close, you got a high, and you got a low, right? What I want you all to do now, follow this on my screen, is imagine and visualize. I'm going to draw it for you right now. If I take out the close and the open, all I'm left with is a vertical bar. Just like this. Just like this. I'm left with a vertical bar. Right? Now, if I got a vertical bar like this, two vertical bars like this, how many bar patterns can I form from two vertical bars without the opens and closes? How many bar patterns? How many bar patterns can I have if I've taken out the opens and closes? Okay, I'm getting all kinds of answers over here. Some being vague, some are being very specific. The answer really is 4. Some of you have been to our webinars and all that. You all know the answer to that. Now let's take a look at this, right? The first one can be just this, no? Higher high in relation to this high, and a higher low in relation to this low. Now, the next one is lower low, like this, right? Lower low, lower high, and that's a high. Next is what we then have is an insider bar and an outsider bar. Okay. And there you go. You got your 4 bar price patterns, right? You got your 4 bar price patterns. Now, this is price level studies. Now, what I've just told you in terms of looking at the trend just based on 2 bars here, which I'm saying check PA setup, check trend on the daily time frame. What I've just given you here, higher highs, higher high, higher low, or lower low, lower high. So that's on a bias up, that's on a bias down. This we do not look at it. This is market compressions. You won't take trades on those days on intraday basis if you're following on trend. Then what I would suggest, this is just only one. There are 5. There are 5. I told you yesterday, there are 5 price level points. There are 5 price level points you can look into determining trend. Determining trend. This is just one, but it's a very good starting point, traders. Very, very good starting point. We use these 5 price level points for 80% RB. Very powerful. All price. All price. No moving averages, no indicators. All price. So okay, so that's the first one, right? So look for all this, right? So if I were to look at yesterday, just based on this strategy, of course we do look at other stuff, but if you look at just this strategy alone, you can see yesterday it was higher high and higher low. But do remember what I told you, right? This is at 10 p.m. close, but this is a bit tricky because this is a Monday bar. Some brokers will combine a Sunday into a Monday, or some guys will combine a Friday onto a Sunday onto a Friday, right? But in terms of this, this is what's right. So they've included Sunday into a Monday bar. So this is what we have actually. This is what we have, and when we have that, what we really have at the moment is higher highs and higher lows. Okay, so that's what we do have in terms of that basis. Okay, to look at the price trend. Right, next, let's move on. Next is on the 1 hour time frame. 1 hour time frame, we want to see a sell-off. We want to see a sell-off, okay? Just like yesterday, it was very obvious, wasn't it? We had 3-4 bars on a sell-off, was it not? Like this. Look, at 7 a.m. where we placed our trade, we had a sell-off, isn't it? It was down, going down all the way from here to here, right? That's what we want. We want all the stops to stack up on the market, understand? So just like that. can see from here to here up to 8 a.m. It was a sell-off, a small retracement and a sell-off here as well. That's what we want to have. Okay, that's the thing what we're talking about here. Okay, good. Next, 1 hour time frame. 1 hour time frame. Then we want a bar. We want a bar to close above its 50% mid-range. Okay, on a 1 hour. Just to put the probabilities to your side. Okay. Yesterday, did it do that? Let's see. Let's see if it did do that or not. And yes, it did marginally on a low test bar basis over here. All right. Okay. So that's what we got in terms of that. Next, we're looking at entries again. And for the simplicity's sake for you all, if you want to put a stochastic onto it, you can as well. It gives you additional confirmation, but of course your entries should be reduced. You can look for a stochastic where it's gone below the 20. It's important, 20 oversold. But this is important. It's got to point upwards as well. It's got to see some kind of momentum coming up, point upwards. Understand? Not only dip below the 20, not just dip below 20 like that, but it's got to move up as well, right? So that's another point. Then your reward to risk ratio. What we are really looking at over here is the entry and the stop, but it's got to be more than 1-to-1 and towards your target. The next thing what we're really looking for, placing the order. Where are we going to place the order? We can place the order anytime from 11 a.m. onwards, where your fund is really good. But I can tell you what, you can change this from 8 a.m. onwards. Change it from 8 a.m. onwards. If you do get a good setup, go for it. Okay. But if you're a bit conservative, you can start from 11 a.m. because that's when most reversals usually happen, what we have seen. On cable, on other currencies instruments, you got to do your research on. Okay, good. So that's to do with that. So let's move on. Okay, so far we've covered the entries, right? We looked at the stochastic below 20 pointing upwards. We looked at entries, right, above 50% mid-range. And we also now looked at more than 1-to-1. We got the risk ratio sell-off, close above 50% mid-range, and checking for the trend. Great. So now that you learn all that, now we've got an interactive exercise here where we're going to be asking you some questions, and the great prize to be won is a ticket at 50% discount, which includes a free ticket, Traders Basecamp, where we have 2 days of full immersion with you. Okay. Right. So let's go for it. Are you guys ready? If you're ready, just type in a yes so that I know that everyone is ready. And oh, very good. Let's go for it. Come on. Good, 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 good. I can see it all coming in. Okay, great. Okay, so let's go for it now. The question says, where should the stochastic be? Where should the stochastic be when you take a short trade? And what should the reward to risk be, at least for a short trade as well? The first people, I can see a flurry of answers coming in. Quite a lot of answers coming in. The first one to get exactly what we are looking for is going to be getting that fantastic price of a ticket at 50% discount. And there we have it. We have actually a winner. Very specific, very in detail. John Foster Powell. John Foster, congratulations. You've won yourself a ticket at 50% discount to spend time with us for 2 full days. 2 full days. All you got to do is just send us your contact details, and our team will contact you shortly. Okay, that's it. So we got one more, so you all can be more attentive towards the end. One more prize to give away towards the end, and then after that, Rishi will be doing his own presentation as well. So lots of opportunities for you all to win. This amazing opportunity to spend 2 days, full 2 days with us when you get a ticket at 50% discount. Okay, email, ad, and telephone. Thank you. Right. Okay, thanks. John, if you can also send us your email, that'd be great. Okay, that's brilliant. So we got that. Now, okay, so let's move forward. But I just want to also all remind you that Traders Basecamp can be high quality information, because remember that we are traders first. We're not trainers. Trainers second, okay? Trainers second. Traders first, trainers second. I also want to reiterate at this point, please don't come over there thinking and having all this skepticism and all that we're going to sell you and choke down things down your throat. We're not going to do that. I'm not interested in that. We're not interested in that as a team. What we're really looking for is high, committed, serious traders. And at that point, you all are old enough, you all are mature enough that if you see it as for you to progress forward, yes, there are products that you can then invest and you can then learn more to develop your skill as a highly skilled professional. But at that point, it's a choice of buying traders, not selling. Everything in your life today, you bought it, not because you sold something that was choked down your throat. And if somebody does that, don't buy it. What's the point? If some product is really highly valuable, it will stand out and you will know that it will serve you, will benefit you, and then you buy. Okay? That's all. Right. Let's move on. Okay, great, great, great. Stop loss. Now, stop loss. How do we place our stop loss? Now, our stop loss, traders, there are 4. Why do we need a stop loss? The reason is some hedge fund traders won't use stop losses because of the leverage that they have, of the capital power that they have. It's a different ballgame altogether. As retail traders, you have to use a stop loss, unfortunately, all right? Now, one thing about stop losses, yes, of course, definitely to minimize the losses. Now, what I want to ask you all, a very quick question, let's see if you all know or not. There are 4 outcomes. One of the reasons why we use a stop loss is to avoid one outcome of the 4 outcomes of a trade. What do you all see? What do you all know as the 4 outcomes of a trade, of one trade? What are the 4 outcomes that can happen? What are the 4 outcomes? Let me give you all the first one. The first one is what we call a big win. A big win. What are the other 3? One of them is a big win. Very good. Small win. Brilliant, Pratik. Very good. Yeah. Small win, small loss, and then big loss. The one thing that we want to avoid using stop losses is the big loss. And this is why traders, this is why we would avoid big news announcements. Big news announcements. Why? Why would we avoid big news announcements? Yeah, because we want to avoid the big loss, and the big loss can occur due to a absolutely spot on gaps. I mean, that was really good, gaps. Because of these gaps, your stop loss might not be filled and you might be exited at a higher stop loss and you might lose more than you wanted to. This is why we want to avoid trading on really big news and on like big gaps. Even if it goes in your favor, it doesn't matter because there can be one which then gaps against you really high up and you will lose all your profits. That's why we do not want to, all the hard-earned profits that you have earned. Okay. Right, let's move on. So where do we place our stop loss? Now our stop loss is placed for the lowest part of the range. This is very strategic, very important, right? So we're looking for a sell-off like this, right? So we're looking for a sell-off. You're looking for a sell-off, stops the cash, and finally for a bar to turn against and then come as a 50% mid-range over here. And then we are looking for the lowest part of the setup. Okay, the lowest part of the setup. So if something is like this, and we put the stop loss for the lowest part of the setup. How do we trail the stop loss? Every 2 1-hour bars. Every 2 1-hour bars. Okay, you can do that. Just count every 2 1 hours and you trail your stop loss. If you want to increase your probability towards this, use the trend, price trend indicator that I told you, no? The one simple way to look at price to indicate 10. Use it on the 1 hour as well. As long as you got higher highs, higher lows, trail it behind the 2 bars. Okay. Forget about all the indicators and everything. They're already lagging. All right. Okay. Good. Now let's move on. Next, target. Now the target is what you can test and adapt. But what you can really go for, you can either go for swing high and swing lows, which you must quantify. Our smart money indicator does that for you already. The swing high and swing lows you must quantify from the chart. then you can get out at the intraday swing high, swing lows, or you can get out at the X pips range. You need to find out how it's a certain pips of range that it does do every day. You can relate that to ATR as well. So there you go. So there you go. You have a strategy over here with an entry, stop loss, and target. Okay. Now the entire crib sheet over here for stops to cash, which we have written in detail over here, you will get it when you purchase a T-kit. You can have the entire crib sheet, which is all written in detail over here in this crib sheet. You can see all these rules for entry and everything what we have written, all the time frame correlation, stop loss, target, everything what we have written. You can get it in your TE kit. Okay. Right, now next one is money management. You need to have 1% risk management, or you can also do standard pip position sizing. Now the most important thing in terms of this, to choose what you want or choose other types of money management techniques, there's one important statistics that you must know out of your whole trading strategy. Do you all know what that statistics is? Go in and punch in into the chat box. What is the statistics that you must know to decide between which type of money management are you going to use? No. I'm getting a few answers here, not getting right one. What I'm asking is, what one statistics must you know to decide which type of money management are you going to use? Either 1% or pip size, position size management, or martingale, whatever it is, any type. What is one statistics you must know? Right, now traders, I can see there's, among all the traders over here, there's a very, very big gap in knowledge, I would say. Very big gap in knowledge, quite weak, very weak. And not surprised by this anymore, is because of the lack of quality knowledge inside the industry today. And we're looking to fill that up by establishing the truth of trading, and not only that, through also our blog videos as well. We're putting a lot of high quality content over there, so keep looking at those blog videos. Okay, very, very important. Now, one important stats that you must look at, okay, is your drawdown of your whole strategy. Your drawdown. And one important thing you got to look at is the maximum drawdown. And the maximum drawdown, you can drill it down to so many different subcategories. 2 subcategories mainly that you have to look at in terms of your maximum drawdown. Now, before you even look at drawdown traders, and I know 98% of you over here, or probably even 100% looking at already assessing you all in terms of the gap of knowledge that you all have, I know that for a fact that probably most of you here, 99.9% of you here, would not even have a trade journal which comes from a quantified strategy crib sheet. Now let me make it clear to you guys over here at this point that what do I mean by a quantified crib sheet, and what do I mean by a 3-step methodology that you must follow. This 3-step methodology is what is described in our Traders Essential Kit. This 3-step methodology is what is explained in our Traders Essential Kit. And unfortunately, out of the 20,000 traders that we have met, 98% of them don't have a clue about this 3-step methodology. And even if they knew, they don't know how to do it, or let alone have the discipline to do it. Now let me first get you aware of what this 3-step methodology is, which is explained in absolute detail in the Traders Essential Kit, which is supported by supporting documents and live strategies taken in real time. The first three-step methodology is where most traders stop at. They only know 1/3 of the whole picture. The strategy component, the strategy component, and the strategy component itself can be broken down into 4 subcategories. 1, it must have rules for entry. Next, it must have rules for stop loss. Next, it must have rules for your target. Not only that, it must also have rules for your money management over here. 4 subtypes must exist within the strategy component. Inside your stop loss, you must have trailing stop loss. You must have initial stop loss, ISL. You must have intra-day target. You must have intra-trade target. You must have pre-trade target rules. All these rules, all these preset rules, you must have to know what you're going to do when you're in the trade, before you enter the trade. Most traders won't even know how to do this. Now, the important part, now listen up, this is very, very important. I would say that if you don't know this, I would say stop trading immediately. What I'm going to tell you right now, is if you do not know what I'm going to tell you right now on this strategy component, if you do not know this, stop trading immediately. The point what I want to tell you is, on the strategy component, all these entry rules, stop loss rules, target, and all that, if you're following someone, or you're doing it yourself and developing your own strategies, if the strategy components are entry rule, stop loss rule, and target are not quantified, please stop trading, because the next components, the next steps won't work. Because the next step, traders, is your psychology component. The psychology component is important for consistent execution. If you do not have quantified rules, you cannot consistently execute. It's like going on a weight loss regime. If you get vague instructions from your fitness instructor, he tells you okay, go and run every day. After 30 days, you just go back to him and say, you know what, I run every day, but I've not lost any weight. Then he comes and tells you, how was your diet? Did you run every morning? What speed did you run? How long did you run? Because running, you can also be running for 100 meters. And you know jolly well, you're not going to lose much weight doing that. So, but if the fitness instructor got very detailed and he said, okay, wake up every day, go for a run every day at 8 a.m., run for 1 hour, and run in that 1 hour 10 kilometers every day, right, 5 days at least in a week, and eat low carbs diet. Now, if he told you all this, and when you went back and executed it, and if you didn't have any doubts when you're consistently executing it, then you know for a fact that your strategy component, your methodology was purely quantified, no doubts. This is the litmus test when you're consistently executing. If you have doubts, something here has not been quantified properly. Very important. And then finally, once you've done these 2 steps, you get the 3rd step, which is your stats review. Only now, traders, only now is your stats valid. At this point, you can analyze your drawdown. Or else, if you don't have all these 3 steps, which is starting from the quantified parameters from the top, and if you anyhow go and look at a trade journal, your trade journal that you have collated, if you don't have all this quantification, all this, and you're looking at the stats, that has not been coming from a quantified, consistent execution basis, your whole drawdown, your whole stats is absolutely invalid. Absolutely invalid. You're going through a loophole. And getting nowhere. Years will go by. Please don't end up like the traders I've seen for 10 years looking in front of the screen and getting nowhere. You just won't get anywhere. Trust me. Traders, it really doesn't matter what type of trading or investment, long-term investment that you do. Any hedge fund, any institutional quant, any mutual fund will all have these stats. And they all publish it. Because all of them are looking for a model that is reproducible and scalable. The whole purpose of doing trading, Come on, let's get serious about this. It's not that you keep on making 1,000, 2,000 pounds every month. It's that so that that profits you're making, you can then finally scale and reproduce. And to only do that, you must have a methodology that you have conviction with, and that must have statistical validation. And all this is explained very much in detail in the T-Kit. And when you come to Traders Basecamp, 2 full days of drilling into this and how we will look into getting this into play in real time. Okay, very important. You don't have the first part quantified, I would say stop trading. Don't waste time, don't waste money. Let's move on. Trade examples, I've given you a few examples already. We looked at ones from yesterday. I'm going to our second question. After that, I'll pass it over to Rishi to go over to his section for today. The second question for the T-Kit, 50% discount, and you get a free ticket, Traders Basecamp, very, very high value workshop. Okay, very high value workshop. That's what you're getting. The second question, okay? Are you all ready? Are you all ready? If you're ready, just type in yes. I will put the question up and you will get the fantastic opportunity to win a prize of the T-Kit at 50% discount, okay? Traders, do remember before I show you and all that, I mean, we talk with so much passion because we really care about you, and I've gone through all this journey of just, you know, going to so many training workshops, and all of them just not telling you the real truth and not talking objectively, you know, all talking subjectively and wishy-washy and all around the bush. You know, that's not what we want. We want objective because we want to get to our goals, because time is the last thing that you can turn back. Right? That's why we talk with this passion, because we really love and care about you guys, because we've gone through the journey, we've gone through the pain. That's why we know, right? Okay, let's move on. Now, the question is, for long trade, how should we trail our stop loss on a stops to loss strategy? The next one is, what is the objective that we are looking for in stops to cash? What is the objective that we are looking for in stops to cash? If you know the answers, punch it away straight on. I can see already some of you are already looking, already to type in. Okay, I'm looking at all these things coming in. Not getting any right answers as of the moment. Not getting any right answers as of the moment as to what we have discussed. Okay, so keep that coming in. If I see any answers that is the right answer, then we will award the prize. For now, there's no prize to be given out. Okay, great. Okay, so now we've come to the end of this presentation. We've shown you live trading in real-time, real cash, stops to cash strategy review, and also a Q&A. Now, if you all have any questions at all, please do type into the chat box of any questions that you all may have. Any questions at all at the moment? Any questions at all at the moment? So what were we looking at? I'm still getting some answers. Any other questions that you got? I mean, other than the questions that we have given out so far. Okay, let me see. Okay, one question here by George. Explain, please, how and when to use the trade journal. How and when to use the trade journal. George, you only use the trade journal basically when you've gone through the three-step methodology. It's the last component, remember? Once you've quantified your parameters, once you've consistently executed it, that can be in back testing or that can be in forward testing, then you then review your stats, and then at that point your stats is valid. If you just keep on collating your stats without the first two components being right, then your stats will become invalid. Okay, that's the important point. And all this is explained in the Traders Essential Kit, George. Yeah. Where are our live classroom lessons? That is going to be in London. It's going to be in Mayfair. And if you want more further details, you can always contact our team. If you want more further information, Richard, you can always send us your email address and contact details, your mobile number, and then our guys will send you all the full details. Okay. Yeah, Michelle, I guess from what you're saying, you are coming from Australia, Queensland, and you're already trading, and you need that edge. Now, that edge is what I broke down to you, isn't it? I mean, go to that 2-hour free presentation that you're going to, and go and you go to that, and then ask them this. You know, how would you break down an edge, and see if they can break down the edge in the way that I told you right now. The 3 categories of what an edge should be. Most traders, most presenters would not even know this. And then you will know. Assess always the traders. You see, the thing is, I always say go by logic. Assess the credibility of the people who want to bring you to where you want to get to before you start investing or even spending a single penny. And it's got to be both 2 ways as well in terms of a teacher and a student. A teacher will only take a student if he matches the criteria of the teacher. And the student should only take up the teacher if the teacher meets the criteria of what he's looking for. It's got to be a 2-way thing. It's just like a doctor-patient model as well. If the patient has got an illness or a disease that doctor can cure, then he will go to that doctor. If the doctor cannot cure that disease, the patient should not go there. Even when the patient goes there, the doctor will not be able to give him the solution or will refer him to someone better. That's how it should be. That's how it should be when it's true. Yes, Michelle. Yeah, of course, you need more to make that edge, and that's why it's a process to teach you that. Yeah, you cannot just learn that in 15-20 minutes. But if you want to keep it easy, you can always just follow what we are doing and see how we are doing it, and then you can get it for yourself. But if you're really serious and committed about it, look. And I think the first place, before, I mean, you're in Australia quite a bit far off, what you can do is look at our blog videos. Look at all the information that we give there. That will help you a lot in putting the edge together. Understand? We'll be putting out more blog videos as we go along into the weeks. Brilliant, thank you. Right, I think that's pretty much that. For some of you have been asking about Traders Essential Kit, and for those of you who want to go ahead and purchase it, we'll teach you about the 3-step methodology. I'm already having questions about that already, like from Michelle, George, and all that. You can go ahead and get it. It's at £97 plus VAT discounted, and you get a 50% discount TB ticket as well, along with that 2-day full immersion point. And for people like Michelle and all that, considering if you're in other countries, you can always contact us, and we can send you just a digital copy of the Traders Basecamp. Or if you want to fly down, you can fly down as well. People have done that in the past as well. They have flown down to our base camps from Europe and from other countries as well. Okay. So if you want to get more in contact and get more to know about us, like Richard and all that, you can always send us your contact details, email, address is more than enough, or if your phone number, if you want to talk on the phone, then we can then send you all further details. Okay. Okay, great. I guess that's pretty much that from my side. Now I'm going to, I think the best thing what we all can do is maybe take a 10-minute break, stretch out, get a drink, get a hot drink, whatever it is, and we will resume at, now it's 9:45, we will resume at 10 o'clock. Okay, we'll resume at 10 o'clock, and Rishi will be doing like that. I just got one last question. How does Traders Essential apply in Australia? It's a digital copy. It's a digital copy, Michelle. So you can just purchase it. We'll send So we'll send a link in the chat box, and then you can then apply it. You can just purchase it through the link, and it can be shipped to anywhere in the world basically. And the shipping is totally free. All right. There's no additional cost on the shipping or whatsoever. I mean, our team will tell you all about that. We will send you the link shortly onto the chat box. All right. Okay, great. If any other questions, just keep it coming. Me or Rishi will be here to answer them. And do remember that if you got any questions at all, not even pertaining to any of the strategies or any of the things that I showed you on the charts today, any questions at all on trading that has been bugging you, please do ask. There's so much of stats and research studies that we have done. We'll be happy to answer you. Anybody who's keen and interested, we are there to serve. Okay, but we need to see the hunger from you guys. All right, so that's it. I'll put myself on mute at the moment, take a 10-15 minute break, and we will come back.
Very good morning to everyone on the live trading week here at Master the Markets. Rishi Patel, talking to you about the 80% RB trade strategy, new flagship strategy here at Master the Markets, currently being rolled out into the live trading room with good success. Would love to teach you the ins and outs of this particular trading strategy. I'm certainly going to, at the end of this presentation, issue some key rules that you could use for entry. So be on the lookout for that. I'm happy to handle any questions from the presentation so far or from anything that we covered in the last 2 days. Happy to handle at this time. If you've got any questions before we kick off, let me know. I'm happy to handle them now. Otherwise, I'm going to go straight in to the bulk of the content. Fantastic. Doesn't look like anything coming in at this time. Let me just double check as well. The questions box here on the webinar platform. Brilliant. Great. Okay, good. It looks like we've got people tuning into the webinar from many different parts of the world this morning here in the UK. So wherever you are, I hope you're having a great day, and you're very welcome here at Master the Markets, and we're pleased to have you on board. So the 80% RB is a 3-bar pattern. I gave this presentation initially at the London Forex Show on February the 24th, 2017. But of course, a risk disclaimer before we kick off. Of course, trading on margin carries a high level of risk. You might not be suitable for all investors. The high degree of leverage can work against you as well as for you. All information provided is for educational purposes only. Vedanta Trading Limited and the presenters are not financial advisors and do not recommend any securities of any kind of securities mentioned. The site is only for illustrative and educational purposes. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. So, as I said yesterday already, most of you have seen me present before. I'm sure there are a couple of people here, and there always are a few people in the webinars that haven't seen me present in the past. My background is in computer science. I didn't enjoy that too much, so I started a video production business while I was still at university. That was great for a couple of years up until 2008, when most businesses got knocked for six, including myself as well. And that's around about the time that I started trading, not around about the time, exactly the time, in fact. I took on a 2-day workshop, and I took, of course, that in October of 2008. So pretty much started trading part-time from there, all the way through to the beginning of 2009, where it replaced my income from the video production business and exceeded it with just 15 minutes a day. So I saw the potential behind the financial markets, wanted to take it live. That's where I met Thiru as well. And then since 2008, we've both been trading together, working as a team. And it's been a superb journey so far. I'm looking forward to what's coming next. So we've traded for companies, we've traded for company accounts, we've traded and hosted seminars live in real markets. We've traded the markets live in groups of 50. Between myself and Thiru now, we've probably coached and mentored well over 20,000 people in this space. So come across a lot of people, and obviously when you come across that number of people, patterns start to develop. And so of course, as a result of that, we're very good at being able to break through those old habitual patterns to help people to gain breakthroughs to a better life, better mindset, more success. I'm also a spoken in China as well. Thiru's also spoken in Singapore. We've covered a few continents between us. So I'm very happy to have done that. Here's me at the Easy Forex conference in China 2014. Everything that we do in our live trading room and everything that we do in the live trading week and everything that we do across our trading is transparent and open, so you can see all the profits and the losses. We've got nothing to hide because the systems, strategies that we construct, proven as consistently profitable. The Elite Traders Conference was hosted alongside Mark Brown as guest speaker. The last time we ran it, this was back in 2013. We're looking to run another one of these sometime soon, so be on the lookout for that. That's for our more intermediate / advanced clients. Mark is, of course, an quant trader, automated trader with 45 years of experience now in the markets. So a lot of experience that he's clocked up over that period of time, and he's a lead mentor for us. And helped us to construct the trading strategy, systems, concepts, and other pieces that we've been putting together and showing you over the last couple of days. Trades Open Day is also one that's hosted by us as well, just there, and that's me speaking at the Round the Clock Trader Live. Do come to the next Round the Clock Trader Live with Simon Campbell, which is going to be in a couple of weekends' time in Holborn in London. It'll be great to meet you. We'll have a stand there. We have 3 speaking slots throughout the day as well, so more than likely we'll go into depth on the concepts that we're going over here. On the last live trading week, as many of you may know, if you were there, we made a profit, an upside of £1,100 on the second day, giving us a net profit at the end of it of £550. We took 3 losses on the first day, and then that was swept away on the second day. This was all done in real time. So good, as with all of our presentations, the gift of now, we will be giving away some prizes. The prizes are fantastic additions to your trading arsenal. And why do I say that? Because you see, it's very important to surround yourself with the right type of person. If you just surround yourself with yourself, by yourself, looking at the market, I can tell you right now, openly and honestly, that you probably don't have a chance. Actually, forget about probably, definitely. See, it's impossible to be able to crack the code of the market by yourself. You have to leverage on professionals. It's exactly what we did. Our trading mentors have decades and decades of experience, and we have more than one. And this is what's essential, and this is what's important to fast track your success. Now, it is possible to make money by yourself. It will be a small amount, and it will probably take 40 or 50 years. If you want to invest that type of time, you should go ahead. What I would strongly recommend to shortcut the journey is to work with professionals with proven track records, with transparency and integrity to be able to fast track that. And that's what we do at Traders Basecamp. So you can get a Traders Basecamp ticket for free with a ticket purchase, 50% discount for prize winners just there. If you don't win a prize, but you still like to get a ticket, I highly recommend it. Some people are asking me about longer term trading. I would look into the lift-off trading strategy, which actually uses moving averages and retracements. It's a fantastic little strategy which you constructed. It's all on the Traders Essentials kit. You can purchase that at tradersessentials.co.uk. Milan is putting in the link into the box right now for the tradersessentials.co.uk website. If you click onto that, you can make a purchase. And of course, you will be able to gain and ascertain that. Anywhere you are in the world, this will be shipped to you for free. There's no cost for that whatsoever. Okay, so in this presentation, I'm going to show you a key 3-bar pattern, the 80% RB trade strategy, the concept and the objective, and some of the key rules that we use to enter a trade on that particular pattern. Now, before I start, I want to bring a little perspective on everything. So, most traders, did you know, most traders don't know this information. So let's see, but I'm happy to be proven wrong in all circumstances. I'm happy to be proven wrong. But can anyone tell me here, anyone at all in the room, tell me one key statistic that you need before you even start to build a strategy? Or what are 3 factors that are required to build a strategy with an edge? Or how do you know when your strategy will continue to make money? Does anyone actually know the answer to any of these 3 questions, especially the third one? The third one is actually something that I haven't come across a single retail trader that's been able to answer with a strong answer just yet. How do you know if your strategy will continue to make money? Can anyone answer that third question? How do you know if your strategy will continue to make money? Yeah, see, you got some very loose answers coming in. I appreciate the participation, and that's brilliant. But the answers are very loose. Let me go over them. So someone's put in quantified results. Yes, you can quantify your results. That's a very good approach. It's very strong, but it still doesn't tell you whether your strategy will continue to make money or not. Someone else has put back testing your strategy. Yes, you can back test your strategy. You can get 50 years worth of results. What makes you think it will fail what makes you think it won't fail in the next coming year? Someone else has put here, you check through indicators and oscillators, do fundamental analysis. Well, that's an opinion, and I don't share that at all. Actually, polar opposite of my thoughts around that. And there's no quantification behind fundamental analysis, which means it can't be measured, which means it can't be proven right or wrong. You have to consistently review and refine to reflect changing market conditions. Absolutely. So when will you know how to pull the plug is my question. Because if you're continuing to review and reflect on it, it's brilliant, that's a superb answer, but you still haven't quite answered how do you know if the strategy is going to, when do you pull the plug, more importantly. Some people are saying you can use all the ratios, not really relevant. Can test the strategy. Yes, you can test the strategy till the cows come home. It still won't tell you when to cut it. It will work in any market. What will work in any market? Check the balance sheet. Maximum drawdown. None of these things, again, are going to tell you if your strategy will continue to make money. You may get a maximum drawdown, and it may easily overcome that in the next few trades. Maximum drawdown over what period of time, over what loss cluster. You can see how all of these answers are really, really, they're loose. I mean, they're good answers, don't get me wrong, right? And absolutely, you know, someone says to me, why Warren Buffett does the same. Okay, if you have the same capital, power, and strategy as Warren Buffett, then you should use that approach. Go for it. By all means, no problem whatsoever. You're probably wasting your time on this webinar, though. So that's that. Let's continue. Let's answer some of these questions because it's important to gain an understanding of this. This chart I came across, and it really did give me a little perspective on what I see as a pattern that forms across a lot of traders. And I can see actually from some of the answers and the way that some people are answering in this webinar, you can quite easily see that some people will fall into these categories. It's very easy. After you've worked with 20,000 plus people, it's not hard to be able to find patterns. And a lot of people that can't just say, hey, do you know what? I don't know. I don't get it. Help me out. Will fall into this category of not actually ever being able to be profitable in this space of financial trading or actually find success in any aspect of their life. A lot of this is about letting go of that ego and just saying, hey, do you know what? I'm wrong. I need help, and reaching out. A lot of people can't do that. And that's okay, and that's fair enough because the bulk of people do lose, and that's why. It's very simple. I'll show you. This is how I found a life cycle of the average trader. And when I say average, I'm taking a large sample. And as I said, we've worked with thousands and thousands of people in the space. People get an initial set of profits when they first start trading. And you may even be able to relate to this example that I'm giving you. When you first started trading, first 3 to 6 months, you got an initial set of profits. And that's probably because it was unconscious incompetence. You didn't really know what you didn't know. And you just went into the market, you started making some money. Then what happens is some losses started to kick in. Now at this juncture, two things can happen. The first thing that can happen is people will basically become consistent, profitable, and confident traders. And that I see is a very, very small percentage of people that I've come across. And then you'll get another set of people who are unable to admit they're unsuccessful and have this huge ego. And you see, if they're unable to admit that, then they can't really be clear about where they are. Now, if you look at the model of a satellite navigation tool, what you'll find is that it uses 2 key points. What are the 2 key points that a satellite navigation model uses? It uses 2 points. It uses where you are, and it uses where you want to be. So if you know these 2 points, a satellite navigation model, a system, a device will be able to quickly work out for you how to get to your route. You see, the problem with financial markets and retail traders that we come across is that they're not really able to admit that they're unsuccessful. What does that mean? It basically means that the gap cannot form. They can't understand where they actually are. And by way of a satellite navigation, if you don't know where you are by definition lost. And that's exactly what happens with most people. And this is the reason that most people don't make money in the market. People that are successful are able to say, hey, do you know what? I don't know. And do you know what? I've been doing it for 5 years and I'm getting nowhere. And hey, do you know what? I've been doing it for 10 years and I'm getting nowhere. Or I've been doing it for 6 months and I feel lost. I don't think I'm going to get anywhere, right? But most people will go down the path of thinking, I'm almost there, I'm almost there, I'm almost there, and lying to themselves. And that's really sad. So that gap can't form. The gap forms only for people that can admit and can overcome that ego. This is very true in personal development, in actually any aspect of life. See, so most traders, they don't adopt that approach, and they use a set of inconsistent parameters. When they do that, they also execute their trades inconsistently as well. Obviously, if you're using parameters that aren't consistent, your execution cannot be consistent. Invalid statistics, and then inconsistent results. So this is generally what happens for most traders, because they cannot get a valid set of statistics, which means, and that even if they do get a valid set of statistics, they don't know how to read them and adapt them so that they can make the system stronger. So this all loops around and it keeps going in a circle. Unfortunately, the sad truth is that the more and more and more that traders stay in that space of becoming inconsistent, the deeper the neural wiring and the pathways in the brain become to keep them locked in that same space. And that's the thing that keeps them isolated. That's the thing that won't allow them to reach out to other people and say, hey, do you know what? I need assistance with this. Please help me. Give me some guidance. Give me a path. And let's make this work, and let's make a plan to see how we can actually make this into a consistently profitable system. So this is the whole issue, and you need to. It's very much up to you at this stage. If you have the opportunity to be able to take thoughts like that of being inconsistent, of having that thick ego, you have to take those thoughts. You have to grab them, and you then have to throw them to the floor, crush them, and then you've got to move forward. And if you're not willing to do that, then you stay in the same place, and that's very sad. And I see a lot of people doing that. I want to make you aware of this, and that's the reason that we have Traders Basecamp. You see, because at Traders Basecamp, you get to form these mastermind alliances. Instead of hitting your head against a brick wall, you have these mastermind alliances. You form a Traders Basecamp where you're working with people who are in the pathway now of making consistent money using a quantified parameter set, and that's what this is all about. That's how you're going to become profitable and successful in this space. Good. So now now you've understood that message. You've understood what's accompanied with the TE kit. Of course, I'll be giving away some prizes for free, Traders Basecamp tickets for those of you that want to take your trading to an advanced level, that want to take your trading to an advanced level of profitability, and be able to make consistent money and be certain, be confident when you're placing your trades instead of being in doubt about, should I keep this on, should I not, should I let it run, do I need to use discretion here? You know, we can crush all of that. We'll do everything mathematically and statistically, and your confidence skyrockets when you have those numbers next to you. If you're in a trade and you know that it's got an 85% probability of hitting its target before it retraces to its stop loss, you're going to hold that trade with confidence. The doubt and everything is eliminated in your mind. That's what we teach at Traders Basecamp. Very highly valuable 2-day environment in which we will crush those old thoughts. We'll grab them, we'll crush them, and we'll throw them away and move forward. And that's what I'm looking forward to working with people on. But again, as Tiru already said numerous times, we're only really looking for a certain caliber of person who's already made that commitment that they're serious and dedicated and they want to trade, because we, like I said earlier, it's about forming mastermind alliances for us as well. We only want to keep a certain caliber of person around us that is serious and committed and dedicated. That's the idea. I want to talk about the 80% RB. This is an extremely powerful trading strategy. We've got the back testing results for this. We've also got forward tested results for this that's proven that it's profitable. I'm going to show you everything in the next 30 minutes. You're going to see all of it. So let's get ready for that, and I'm happy to take questions as we move through as well. I want to talk about, please pay close attention to the content that's upcoming, because of course there'll be prizes that are handed out around this. Millen will reach out to you if you're a prize winner, ask you for your contact details, and then of course please do submit that if you would like to claim your prize just there. The whole purpose of the 80% RB trade strategy is to find turning points in markets, the idea being that when a bar closes above the 50% point of its range, 68.2% chance of that particular bar breaking the high of the previous one. So that bar that closes 50% above its range, we call that bar PSWB, short form for potential swing bar. And then, of course, PSWB plus 1 is just the bar that follows the PSWB. There are two types of V1 setup where you can get a PSWB. You've got V1 and V1OB. Please don't Google this. You won't find anything about it. It's proprietary in-house Master the Markets methodology. There's nothing online about it. You won't be able to find anything online. It's not documented anywhere. It is our proprietary work. It's our proprietary research that we've put together over the 10 years each that we've been in the markets, 20 years total, plus getting advice and guidance from our mentors who have 45 plus 20 years experience in the markets. So it's not online, it's premium material, and it is just for the purpose of our webinar this morning. When the PSWB closes above 50% of its range, as I said, the concept is that there is a chance of, there's a 68.2% chance of the PSWB plus 1 breaking the high of PSWB. Swing highs and swing lows consistently form in the market. That's the concept of this. Can anyone find a market for me in which swing highs and swing lows do not form? Punch in the name of a market where swing highs and swing lows do not form. Type something in for me here. Give me a market, any market, where swing highs and swing lows do not form. Yep, some people are saying sideways markets, but you see, even in sideways markets, you're going to get something like this. And in a sideways market, you still got swing highs and swing lows forming right there. Swing highs, swing lows still forming, even in a sideways market. Exactly, someone says none. That's absolutely correct. I haven't come across a market which moves in a straight line or moves one bar sideways forever. It doesn't happen. That does not happen. I've never seen a market that also moves in a straight line as well, that just goes straight up like this and doesn't retrace. That also doesn't happen. Does that mean that by a show of hands, does that mean that swing highs and swing lows consistently form in every market? Punch a Y for yes, punch a N for no. What does that mean that swing highs and swing lows consistently form in every market? For us to move on, we need to have a base level understanding and a unanimous agreement on this. Absolutely, yes. Getting a couple of hundred yeses coming in. So I think that people are basically in agreement with this, right? This is absolutely right. So you see, swing highs and swing lows consistently form, and that's the concept in which this 80% RB strategy is formulated. Now, if swing highs and swing lows stop forming, this strategy won't work, which won't happen because profit taking is something that's a recurring pattern in any market. So we build our trade. This is the first thing to understand here at Master the Markets. When we build a trading strategy, we don't do it randomly, which you'll see a lot of people do. And if you go to anyone that's built a strategy and ask them, what's the concept of your strategy? Or what's the objective of your strategy? Very high probability won't be able to give you a very strong answer. But here at Master the Markets, we can tell you that we're absolutely clear on what our concept is. The concept here is that swing highs and swing lows consistently form in the market. Now, I have mutual respect for all training businesses in this space that are looking to serve people and looking to help them to grow and uplift. But obviously, you need to be able to be smart enough to ask the right types of questions. And what I want to do here today is train you on the types of questions that you can ask someone to ascertain their credibility. And feel free, as Thiru said, to ask us any question about the market. We're more than happy to answer it if it's relevant in this environment. We're more than happy to answer it. And we'll be more than happy to give you an answer. If we don't know, we'll reach out to our mentors and we'll find an answer for you and get back to you as well, again, if it's relevant. But ask questions that are relevant. Someone here is asking me to help them to pick out stocks for long-term trading, to which I've just kind of ignored totally because it's not relevant for this environment at all, and it's not something that I'm willing to do either. So that's Don't ask questions that are relevant. Ask people, anyone that's offering to train you, ask them questions which are relevant to ascertain their credibility. One of them is, what's the concept and objective of your strategy? This is the concept of the 80% RB. The objective of 80% RB is to catch the range, and this part is very important, the range from the open to the high. So obviously it's impossible to catch the entire range, but our research asks the question in terms of what part and how much of that range can we capture based on what the average moves are in terms of stretch 10. So stretch I've already been over earlier this morning. If you missed that section, you've got to go back and look at the recording. I've explained stretch, and Thiru also explained stretch yesterday as well. I'm not going to recover concepts that we've already done. Move at a pace, and you need to go back and do your own reading and research on these things. So to formulate a trading strategy, first we need to do an element of research to ask ourselves if the concept and objective that we have can actually be captured. So we've studied what this 80% RB is all about. Is a study. It's a study of bars and price using the actual bar formation. We have a full understanding, a very complete and comprehensive understanding of how bars form. That's what this study is about. And the PSWB plus 1, which is the bar after the potential swing bar, has been studied mathematically and logically in order to capture its range. So we took into account 11 key criteria of the V1 pattern, which I already showed you. So we took 11 key criteria into account of that V1 pattern, which we showed you. Now, of the 11, we came up with 4 that were crucially important when put in a combination together to be able to achieve consistent profitability. Now, we also asked, as well as one of these are the questions that we've asked in our research as well to build this trading strategy. The first one is, what is that stretch distance for the PSWB plus 1 for 80% of the trades? And we want to ask that question because we wanted to achieve a tight stop. So that's the first one. The second question, of course, here is target setting. How many times the stretch is the range of the bar from the high of the PSWB to the high of PSWB plus 1 as target setting? That's the question that we asked just there. And then we also asked the same question taking into account the 1 hour and the 4 hour swing low and high. We asked those. Let's go into a little bit of detail on each one of these questions. So the first thing we did is we studied the formation of that PSWB plus 1 in order to understand, using mathematics and logic, how to capture that range. Okay, so we have a V1 pattern here. This is what we class as a V1 OB. Can everyone see that the solid green bar there is an outsider bar? Say yes if you can see, still see if you can see that that's an outsider bar. Great. I'd like everyone to participate as much as possible. The reason for that is because we're in a webinar environment. The advantage that I have at Traders Basecamp is that I can see you and I can gauge everyone's reaction very quickly to see where they are in terms of understanding. In a webinar environment, I don't have that luxury. And as a result of that, I'm relying on you to be interactive with me to make sure that you're keeping up and you're understanding what I'm saying. So I'm asking you questions just for that purpose, to keep us engaged. I want you, it is my sincere intention to deliver as much value in these 3 days. It is our, as a team, sincere intention to help you to break through these old patterns, old beliefs, and show you real value in these 3 days. And we have amazing feedback on all of these live trading weeks. I wish there were a couple of more live trades this morning. Unfortunately, there weren't, but that is the market. So we'll deliver more value in a different way. And I'm really keen. It's my sincere intention that we as a team here deliver a huge amount of outstanding value to allow you to be able to differentiate us from other training providers in this space, because we're not training providers. What we are is traders. We do that first. Everything I'm showing you is proprietary research that we do as a team here in-house. This is our job. And we apply this to the market to make really good money, and this is the material that's sent in to Master the Markets, the training business. So I really want you to keep up. I really want you to understand. I want you to be interactive. I want you to ask questions, and I want you to shout out yes when you know. Fantastic. So you can see that we're doing this using mathematics and logic. Now, using mathematics and logic, we also called a cable trade this morning. Now, initially, we had an opportunity that we wanted to assess short, but then we also looked at a very key mathematical level to say that if it had crossed a certain level, that short be cancelled, and there's a high probability that that was going to continue to climb. You can see right now that that cable, that pound dollar, is on session highs. Here I've just broken it down on an hourly chart, and you can see that it does have a good amount of momentum behind it as well. That hourly bar is continuing to push up. So this was not guessed. This was done mathematically. We looked at the statistics that we compiled as professionals in this space, and you can see the way that that pound dollar is moving. Now, we can't capture it due to the nature of the trading strategy, and that's okay, because sometimes we have to let moves like this go because they don't fit a plan. But that's the discipline behind what we do here. And what we can do is take this as market feedback and adapt this into our plan if it's necessary. But this is a typical example of how probabilities, when stacked in your favor, can give you an edge in this space. This is what's important. This is what we want to illustrate. Back to the 80% RB. So we want to capture this range of this PSWB plus 1. So the V1 OB pattern, that's the green solid outsider bar, is called PSWB. Okay, can anyone tell me what this dashed green bar is called in that case? I've already on the screen as well. I just want you to be able to keep up with me so we can go back to this. We can carry on pushing forward. What is the dashed green bar called? What's its name? Type it into the chat box. I need a few of you to do this so that I know that you're keeping up. I'm going to press forward. Dashed green bar, what is it called? PSWB plus 1. Some people say buy bar. We're getting lots of different answers here. A potential bar and profit. No. Okay, good. Yes, I mean, so these answers are correct, but for the purposes of this example, this dashed green bar is PSWB plus 1. Okay, so that's what we're calling it. We're calling it the bar after the potential swing bar. Good. As I said, we took into account 11 key criteria of the whole V1 pattern. As a whole, that 3-bar pattern, the V1, we took 11 criteria into account. Now, what I want to do is I'm going to give you a little gift in a short while. I'm actually going to give you one of those criteria. You can have that. It's on us, and that's normally only disclosed actually at the closed door session at Traders Basecamp if you make it that far. That's actually only normally disclosed there, but I'm going to give you one of these key criteria. So that's what it is. Before we do that, we're going to give you an interactive exercise, and it's an opportunity to win a ticket to Traders Basecamp as well as a TE-Kit 50% discounted voucher. You know how the breakdown is. This TE-Kit is an extremely comprehensive piece of technology. Whether you're a beginner or an advanced trader with 10 years plus of experience, this will give you crib sheet templates in which you can design your strategy with quantified parameters. It will give you a trade journal in which you can log every single trade that you're taking with statistical analysis of the stats that are valid and important. It will give you all of that. And a lot more as well. We've got lots of live trading examples of the 80% RB strategy in here as well. We've also got other strategies in there for you as well that you can read. It all comes packaged onto a USB key, be shipped anywhere in the world for free. And here you can win a 50% discount to it, as well as a free ticket to Traders Basecamp. So let's take you over to the question. As you know from earlier, yesterday, I already explained it's the fastest answer first that's correct that's going to have the opportunity to win this prize. Here is the question. What is the objective, not the concept, the objective of the 80% RB trade strategy? Okay. Lots of answers have come in. Let me have a look through the list as to the best ones that are correct. And in the fastest space of time, I need to scroll on this chat box because there's quite a lot of interaction here. So let's have a quick look. So, fantastic. I think we have a winner. Well done to Alan. So, Alan, you've got the correct answer. If you've already won a prize in the past, in that case, just let us know. And that's not a problem. But in other case, it is Alan. Milan, if you can just reach out and then just find Alan's contact details, we can send him across. Okay, fantastic, no problem. We'll touch base with you on that, not a problem. So the next person up, I thought you'd won a prize yesterday, so that's fine. The next correct answer was from, let's have a quick look here. Well done to Peter Williams. That's the next answer that's correct, that's come in the quickest. And you're absolutely right, sir. So my colleague Melon will reach out to you and we'll take it from there. Good. As I said, I want to give you a little gift now. I want to give you one of the key criteria that we look for out of the 11. I want to give you one of the key criteria that we look for in term by way of understanding what this PSWB plus 1 is going to do, right? I'm going to give you one of these, and this is a gift. This is from us. There are 5. Actually, here there are 5 points, and then there are additional 7. I'm sorry, there are 5 points, but actually there are an additional 6 on top of the 5 as well, making 11 in total. I'm going to give you one out of the key 5 that we have. So one of these key 5 is the close to close. You need to look at the difference between the close of the PSWB and the close of the bar before the PSWB. You need to look at that. If you look at that, then you need to gauge, is the close above the previous bar's close? This is one of the key criteria for turning points in the market. So that's one of the key criteria for turning points in the market. So do understand that, do ascertain that, that's important. And we will reach out, of course, and on Traders Basecamp in the closed door session, that's an exclusive session for people whom we want to work with beyond the Traders Basecamp. That is exclusive session that only certain people, is by invite only, will learn all of these criteria just here, and we'll issue that at that time. Good, so let's move on. So the questions that we asked, if you remember, let me scroll back up to the questions just to do a little recap, because I appreciate we've gone through quite a lot in a very short space of time. What is the stretch distance for PSWB plus 1 for 80% of the trades? And that's to achieve a tight stop. In fact, even before we get to that, I want to talk a little bit more about the PSWB. I'm going to show you something that's actually not in this presentation. It's another actual little gift for you. I want to add a little bit more value here. Actually, I'm saying a little bit more value. That's from my perspective. Actually, from your perspective, this is huge. This is going to be massive. What I want to do is I want to show you the 4 ways, the 4 possible ways with the highest probability that this PSWB plus 1 can form. And so we broke this down into a series of diagrams, which we then passed to our in-house programmer, who's able to quickly assess and analyze and do the maths for us by way of which probabilities are going to be fulfilled for each pattern. So I'm going to show you this. So bear with me just a moment. I want to pull open a different document. Okay, so you're going to look at a screen now here with me of a document which we actually sent to our programmer to be able to ascertain what should be the different permutations of these PSWB plus 1 bars. Now you can see in the first two diagrams, the stretch here is opposite to the bias. The stretch here is on the downside, and on the downside, this has a close above the open, this has a close below the open. The third diagram here, the fourth diagram I've taken off, but you can see the three diagrams out of the four. The fourth diagram is obviously something we don't want to happen, so is the second one, where you've got a stretch in line with the bias and the closes below the open. That would probably have stopped us out. What we asked our programmer to do was to hunt out the PSWBs that form the V1 pattern and find out for us the percentage probabilities of each one of these occurring. And we actually have that spreadsheet back, and we have the ability now, and an indicator to be able to test this across thousands and thousands and thousands of trades to see the power and the credibility of the PSWB and how accurately it gauges turning points. So we've got all of those statistics. Again, any of you coming to Traders Basecamp will have the opportunity to see those spreadsheets because we can go into a lot more detail right there. So the fourth pattern, it would be good if you go away and have a think about it, what it could potentially be. You may or may not be able to gauge that and ascertain it. But again, if you're coming to Traders Basecamp, we'll go into much more detail about these patterns just there. Let's carry on with where we were going. So I showed you those three diagrams, and I'm just referencing the agenda that I made for myself in terms of all the value I wanted to add this morning here on this presentation. Good. So we've got that. And then we've got the stretch distance. So we asked ourselves the question, what is the stretch distance for the PSWB plus 1 for 80% of trades? Why do we want to know that? What is the purpose of knowing that? Can anyone tell me what they think is the purpose of knowing what this distance here would be from this open to this downside here, the smaller range from the open? Remember, the bigger range from the open cannot be the stretch. It has to be this closest extreme to the open. It can only be this distance here in this case. So what is the purpose of knowing this? Can anyone tell me what they feel is the purpose of knowing that? Let's say, for example, that I want to be able to trade this market long. That's exactly correct. Yeah, some of you have a good answer just there. So I want to trade this market long. So if I understand what is this stretch distance, then I can understand 80% of the time where these go to, where they pull back to, so that when the pullback is complete, then we get the upside and then we can get the profit. Now, if I know where it pulls back to, I've got a clever place in which I can position my stop loss. So some of you have said that absolutely correctly. I need to know where to position the stop loss on these trades to keep it as tight as possible to maximize the upside, but then also not to keep it too tight to compensate for the reward risk, to skew the reward risk ratio. So it's a very, very delicate mathematical calculation, and we haven't just done it using the stretch. Actually, we've asked this question in many different ways in order to be able to gauge, not only from an X stretch perspective, not only from X stretch 10 perspective, but also from the perspective of how many pips, and we've asked in very, very different ways so that we can be able to do that just there. So good. That's very pertinent and important just there. Let's move forward and let's just continue on. Right, let's carry on. So okay, fantastic. Okay, just before we continue on, I'm going to show you as well. Would you like to see the answer to this research question over a period of 2,000 trades? Who would like to see the answer to this research question? How far does this pull back by way of in terms of stretch 10? How far does this pull back before you see the upside? Would that be good to see? Punch your Y into the chat box if you'd like to see that. In fact, I just realized that we're, yes, okay, I've got lots of yeses. Unfortunately, I can't do that right now because I've just realized that we are running short on time this morning. We want to finish on time, so I'm going to carry on. So the rules for entry for this are coming up. The other thing that we asked were in terms of target setting. So the target setting we've asked by multiples of stretch 10. We could also ask by multiples of stretch 1 as well. which will actually be more relevant when you think about it, and that's something that we've been contemplating on here in the research team as well. We've been asking the question, would it be more relevant to ask this distance in terms of stretch 1, which is just the PSWB plus 1 bars, by way of setting the target from range from open to high. So that's something else that we're looking at as well, and we've got the research answers for that too. We also asked in terms of if there was a 1 hour and 4 hour confirmation. The interesting part was that you do actually have that. So the second question's conclusion was actually there's 84% of all the samples actually had a certain pullback in terms of stretch 10. If you're coming to Traders Basic, I'm going to share all the statistics with you. Question 3 conclusion, 84% trade sample reached a target of at least 2 times stretch. However, we chose a different target because we wanted to override losses from other trades. And the other interesting part was when you get a 1 hour and a 4 hour swing confirmation in the market as well, actually that X stretch 10 target can go to many more multiples than what we had earlier without any confirmation. So we're able to actually get an even bigger target when we have those time frames confirming swing lows as well. Again, happy to share all of the statistics. We'll go over that at Traders Basecamp based on that. Okay, this is going to be my last question for the day. This is your last opportunity to win a ticket for the Traders Essentials, discount for the Traders Essentials kit, as well as a free ticket to Traders Basecamp to be able to see all of these statistics, be able to implement it in your own trading and maximize your upside as well. Here is the question. What 2 additional time frames did we look at for further confirmation for PSWBs plus 1? What other time frames? What did we look at? Which were the 2 time frames I just mentioned literally just now that we look for further confirmation to be able to maximize our target? Fastest answers come in from Peter Williams. So Peter Williams, well done to you. Millen will reach out once again and engage contact details so he can send across the information for how you can claim that prize. So well done. Let's go back to our presentation and continue it forward. Right, good. The next thing I want to show you very quickly while we have time is actually the testing results for this concept. Once we derive the answers, we're then actually able to do some back testing. Now we cannot do the back testing, and it is pointless to do back testing without having valid questions in place. A lot of people go to the market and they start to test the market without even having a clue as to what questions they need to research first to be able to gauge answers to be able to do their testing. Actually, almost everyone that I've seen does that. They don't know how to ask the right questions. So here at Master Markets, especially in the Traders Toolbox course beyond this, we actually teach people how to ask the right questions based on what you want, your objective and concept. So this is the key. So we asked the right questions, we understood and ascertained where to position the stop losses, and then we put these results together. So in 2016, for the type, PSWBs, by the way, are split into 6 types. But for the type 1, which is the base level PSWB, we actually had a total of 24 trades. 24 of those trades, 13 we had winners, 11 were losers, so the reliability was 54%, giving us a net profit by percentage amount of 7.63. Now remember, this is only for 1 year, 1 currency. When we multiply this across 5, 10, or 20 different markets, you can get an understanding of what could potentially happen. Now, this is 7.63%. We don't trade this by percentage amount. We trade it per pound per pip. And according to this just here, we've actually made a return of 447 pips over these 24 trades, net profit after those 24 trades on the type 1 PSWBs. Now that's backtesting, and backtesting, of course, will be something that you can do, but however, it may not hold in forward testing. So then what we also do is we forward test the market. And so you'll have seen on the emails that Simon has sent out, we put attached screenshots of account statements. If you go back and reference those screenshots of account statements that we published are actually from the 80% RB trade strategy. You can actually go and see them. They're very recent. Just from last month, I published the last set. And you can actually go and look at them, and you can look at the net profits. Now, they tally up perfectly with this information just here, which is our cash and system results. So what is this? First of all, does anyone actually know the two types of equity curve that is important for you to keep? Does anyone know the two types of equity curves that's important for you to keep on the market? Does anyone know actually two types of equity curves that are important to be able to gauge your performance from? There's two types of equity curves that you need. Can anyone tell me either one of the two or both? No, a couple of people saying don't know. That's fair enough. So I can tell you here that the two types of equity curves, and again, some people say no profits and drawdown is not quite correct. That's not. So what you need to do is, Mark Douglas talks a lot about this in Trading in the Zone, and the two types of equity curves you can keep. And again, what you have to ask yourself when you're assessing the credibility of a training provider is, can they even provide you? First of all, do they even know? Secondly, can they provide you with actual equity curves of actual trades that they've taken in real time of these two types of equity curves? So that's the questions that you need to ask. The two types of equity curve are the system curve, which is exactly if you had taken every single trade perfectly, executed flawlessly, and got in exactly where you meant to, got out exactly where you meant to, what would have been your upside? i.e., if it was mechanically done by a computer with no emotion, no slippage, absolutely everything is perfect in real time, what would the result have been? The second type of curve is called your cash curve, and that's what you actually achieved with human error, mistakes, mistrades, etc. So when you look, we've got both logged, and when you look, and you can see actually in our system and cash curve, we have missed some trades as well. In our cash curve, that happens, and that's normal, and you'll know that someone is human when they're making one or two mistakes here and there. Your goal is to make that as close and as tight as possible. So when you look at the actual performance between the two curves, and these are forward tests, these are actual trades taken in real time with money in an account being placed, and we've got the account statements backing all of this up as well. They've been sent out to you on an email. Now the cash curve here has accumulated and given us, I believe it is 88 pips. Let's just check. Just here, the cash curve, 89 pips of upside profit. The cash curve has given us in 6 weeks. This is of 80% RB trades, whereas the system curve has outperformed that and given us 122.75 pips. So you can see that there is a gap in between our execution and what the system should have done. So you can see that that gap is in place, and that basically means that somewhere we've missed trades, somewhere we've inconsistently executed, and the system has outperformed our actual performance. So the system has done a performance of 122.75 pips, our personal performance 89 pips. So we have a gap, and that's called a profit gap, and that's the gap we look to bridge as a team. But of course, if you don't know first of all, if you don't know the two curves, you can't even form a gap, which means you can't even bridge it. Secondly, no one logs the system and the cash performance. I haven't come across anyone that does it, apart from Master the Markets. And third, I've not come across anyone that can give an explanation that's this tight and quantified. So that's what we do here. That's how we've formulated this strategy. So we know that it works. And you can check those account statements. Every single one of the trades on this cash journal just here, every single one of those trades will tally up with the screenshots that you were sent out. Every single one, to the pip, it will tally up. And you can see it, the entry, stop, the exit, it will all tally up, and you can see where the profit has been made, you can see where the losses have been made. That's what we do, and that's the level of transparency that we're shooting for here at Master the Markets. So that's what we're looking for just there. Good. I'm going to bring my presentation to a close. Some recent trades. I wanted to give you some entry criteria just here. So entry criteria, one of the entry criteria you can use, it's not the one that we use in our live trading rooms, it's a different one, but you can still use this. If you find the V1 pattern, and the V1 pattern, of course, is you're looking for a swing high to confirm to take a long, you're looking for a swing low to confirm to take a short, and of course, then you're looking for a 3-bar V1 pattern. You can enter on the high of the V1 pattern. That's the entry criteria. Of course, that's useless without the stop and the target, which you will gauge and you need. And all of our Live Trade Mentorship Advanced members have complete access to the entire set of criteria, and they have complete access to the way the strategy is made, all 11 criteria of the PSWBs. So that's what we put together here for you. In this presentation, I've shown you a key 3-bar pattern, the 80% RB trade strategy, the concept and objective, and the rules for entry, for a variation of rules for entry that you can use just here. If you want to get access to other strategies we put together, the crib sheet template, the trade journal, everything else, that's all available on our Traders Essentials kit. If you haven't had a chance to win one, that's okay. If you want to get one, you can have it shipped to any country in the world. I believe I've got some information about it just here. It is discounted down to just £97 plus VAT. It will come to you on this USB key. You just slot it into your computer. It's got all of the content just there. You can see that you get the Trader Starter Pack DVD, placing orders, true trading strategies, live trading videos, our premium crib sheet template, which will basically show you how to, you'll get a video on how to use it. You'll also get a crib sheet template on which you can fill out for your own strategy, a superb trade journal template in line with the ones that I've shown you as well, and you'll get the trading psychology audio program as well. So that's fantastic. You are looking at that. You'll also get some bonuses as well. The 50% discount to Traders Basecamp. You'll get a digital version of the kit as well, and closed group support in our closed group environment. Just there's £97 plus VAT on our website. Kindly, Millen has just put the link up for me just there on the chat box. If you want to make a purchase, be shipped to you for free anywhere in the world. Just click onto it, make your payment. I believe in some countries you don't even charge VAT as well. Pretty lucky. So there you go. You can get that at a superb rate. So thanks very much for tuning in today. We look forward to catching up with you all tomorrow in the live trading group, live trading week last day, which will be the Wednesday, 26th of April. I trust we've added a great deal of value here. I believe that you've found the content useful, and I'm happy to take any questions by email, and I'll be happy to answer them tomorrow. You can send Millen an email. He'll forward that to me, and we'll handle them all in tomorrow's session just there. Feel free to join the end of day trading room this evening. There's a possibility of some 80% RB trade setups this evening. Feel free to join the trading room. If you haven't joined the trading room, you don't have the link to do that, it's masterthemarkets.net. Millen will place that link onto the chat box for you as well. Just need to click your name and email address, press the get started button at the top of the website. You'll get a link to access our live trading room. It's a 3-day trial for free. I'll hand back to Simon, who will bring us to a close, and we'll be able to say bye that way.
Okay, many thanks, Rishi. That's great. Another long session, but you've covered a huge amount of information, which is great. So we will again process that recording.